Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the intangible assets definition. As I do in every one of these videos, I'll give you the definition and then we'll look at a few examples. Intangible assets are assets that lack physical existence and are not financial instruments. Therefore, they cannot be destroyed by fire, flood, or other natural disasters. Intangible assets are usually classified as non-current, meaning that they're long-term assets because they produce benefits over several years. They are valuable because they do provide rights and privileges to their owners. However, intangible assets can often be overstated on the balance sheet, and that is something investors should be aware of. Examples of intangible assets include trademarks, copyrights, patents, franchises, customer lists, and many other things, including goodwill. Normally, intangible assets cannot be used as collateral to raise loans. Now, let's go look at a couple of examples on some balance sheets. Okay, we're going to start off looking at Johnson & Johnson, ticker symbol is J&J. Their balance sheet is where you're going to be finding your information pertaining to the intangible asset. I got the tools right quick. Okay, here you have the intangible asset item, and here's the amount that they show for that. You'll notice that is in the long-term assets. Sorry, this is actually, that's that. This is all current. This is the longer term. Remember, intangible assets fall in longer term assets. You'll also notice that though I mentioned in the earlier definition, goodwill is an intangible asset. It is classified as an intangible asset. However, on the balance sheet, you're not going to find it listed here. It has its own place. And the reason for that is quite simple. And goodwill only comes into play when one company buys out another company, the entire company. Intangible assets right here can actually be sold and the company still exist without that intangible asset. So that's important to note. That's the actual difference between the two. You can't sell the goodwill of a company without also selling the company with it. Okay, so that's why there's the difference there. And again, it only comes into play when one company buys out the entire second company. The main thing to note about this is that intangible assets as well as goodwill can be inflated. It's difficult to get an accurate price on that. A lot of times investors will simply strike these items when trying to find out what the true value of a company really is. And there are cases where you can find balance sheets that will show huge amounts recorded in intangible assets or goodwill, and you know, it will be not balanced with the other assets. So if you have a balance sheet that shows a whole bunch of very small assets and then you've got massive amounts of money in intangible assets and goodwill, that can raise a red flag with you. And I'll show you an example of that right quick. I'm not going to show you the company that I found this on because I don't want to badmouth the company. I'm just saying it raises a red flag with me. Actually, if I was actually looking at this particular company that I'm about to show you, I would have to call the company and figure out what the heck they're doing. But let me show you the balance sheet right quick. Okay, this is the balance sheet for the unnamed company, and all these numbers are in the thousands. So when you look at this particular balance sheet, again, it would just raise a red flag with me that you have intangible assets at $2.2 million. You have goodwill at $1.3 million. Yet your property, plant, and equipment, you're talking about $6,000. So that's like, I think I've got that much money in my office. So this kind of sets off a red flag with me. These, obviously, if I were trying to find the value of this company, I would simply strike these numbers right here and start working with math that way. So now you know this is everything that you need to know about intangible assets. Yes, of course, goodwill is an intangible asset, but it is separate on the balance sheet, and now you know why. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.